and the local index, including the rand, they're poised for a better day of trade today after the mixed bag yesterday. The JSE closing firmer, while global peers were mixed as investors await a key U.S. inflation data this week for insight into the Federal Reserve's monetary direction. Now, the rand reserved, or should we say reversed, earlier gains, weakening the sixth consecutive session, touching an intraday worst of 18 rand 80 to the dollar. Let's speak now to the head of equity research at FNB Wealth and Investments, Chantal Marx. Chantal, good morning to you, and thank you for your time. Let's pick up on your quick overview of how the local trade is faring this morning. Let's also touch on the rand.
It started quite strongly. We've seen some really good support coming through from the resources sector. That was expected because if we looked at how Australian markets traded this morning, most of the mining companies there were up as well. What's also quite interesting about this morning's trade is that we're seeing some really good activity in the small and mid-cap space, also pushing the market higher. Of course, all of this is helped by a rand that is steady this morning, actually a touch stronger this morning ahead of that important CPI print that you mentioned out of the US later today. It does seem as if things are calmer a little bit on the local currency front, and long may last.
Let's talk unemployment. That data for the third quarter expected later this morning. The expectations of what we can look to when that data does eventually come out?
Well, macroeconomic conditions have remained very constrained, and that will have filtered through to the employment data as well. I mean, we have had the unemployment rate at over 30 from the pandemic era, and it really hasn't come down to that pre-pandemic level of about 25.5%, and I think we're a long way away from that. What we have seen is that employment numbers in absolute terms have recovered, but the labour force, of course, has increased over the last 3 years, and that is why you're seeing the unemployment rate at such elevated levels. So we expect a similar kind of print to what we saw in the second quarter at around 32.5%.
Let's talk ratings agencies. Moody's, the Moody's Investor Service, placing Transnet's credit ratings on review, and this is possibly for a downgrade. That should come as no surprise, but help us make sense of these developments and what will they mean if indeed Transnet does eventually get downgraded.
Well, as you mentioned, it's absolutely no surprise. We know that Transnet's performance has deteriorated, and because that performance has deteriorated, their revenue has come under pressure. We also have borrowing costs quite high for governments and for corporates alike, and Transnet is no exception there as well. So the combination of high debt and lower revenue has really resulted in that debt burden becoming more of an issue. And because they are performing poorly operationally, it's becoming more difficult for them to access funding or to refinance the debt that they do have. So we are in a precarious position with Transnet. They're probably going to require government support in order to turn things around. But Moody's is saying that the government support so far has not been forthcoming, and it hasn't been outlined properly yet. You know, in the medium-term budget policy statement, the minister didn't commit anything to Transnet in particular, and I think that this is why we are seeing this action coming through from Moody's.
Let's conclude with the company news. Storage Property publishing its results for the 6 months which ended 30th September 2023, including that a cash declaration, or should we call it a cash dividend. Talk us through the performance.
So storage is such an interesting company because it acts differently to other property companies because it's in that self-storage space. And they tend to do quite well and be quite defensive during periods of economic strain. And this really came through in the print that they put forward this morning as well. They saw some really good growth in property rental income, particularly in South Africa. The only thing that dragged on storage in this specific period was a negative property devaluation in the UK, as well as higher finance costs. We know that finance costs are quite high because interest rates are quite elevated. But still, they managed to push through an increase in their dividends, and they actually updated their guidance for their dividend that they're going to pay for the full year a little bit higher. So the market has reacted quite positively to this result, and a really interesting one to watch when everything else is under pressure.
Chantal Marx, thank you very much for that markets update. She is head of equity research at FNB Wealth and Investments.